G'day folks, welcome back to another review in Pete's Investing. Today we're looking at another Magnificent 7 stock, Microsoft. Before we go any further, make sure you hit that like and subscribe button to support the channel. As of May 23rd this year, revenue and earnings growth, third quarter 2024, revenue rose 13% year over year to $70.10, $17.1 billion, I should say, with net income up 18% to $25.8 billion and EPS at $3.46, surpassing expectations. Cloud and AI momentum. Intelligent cloud revenue increased 21% to $26.8 billion, fueled by Azure's 33% growth, with AI contributing nearly half of Azure's expansion. In terms of productivity and business processes, Microsoft 365 commercial cloud revenue grew 12%, driven by a 7% increase in seat growth, particularly among small and medium businesses and frontline workers. Gaming and personal computing, overall gaming revenue increased by 5% despite a 6% decline in Xbox hardware revenue, with a notable 45% spike in PC Game Pass revenue. Strategic investments, Microsoft reaffirmed its $80 billion capital expenditure plan, emphasizing its commitment to AI and cloud infrastructure. So if you're new to the channel, we always look at the long-term trends and then look at micro trends as well. So the long-term, on the monthly back here, we did have this price still moving above the moving averages, and these moving averages, by the way, are in the description below if you want to learn how to draw them. But basically, we had a bearish divergence back here, lower highs on the CCI versus high highs on the price, and that actually fell and broke into the minimum retrace level. And that minimum retrace is applied with a Fibonacci retracement from that high, and we take it back to that low. Now, it depends on where you take it back, the Fibonacci level, but that low was hit at 38% level at that point there. And if you took it back even further, depends where you draw the, I like to take the Fibonacci back to the previous low before that divergence started. So you could have taken it back at any one of those spots. Let's say we took it back to there. That still hit the 38% level. Let's go back to that point there. And that also hit the 38% range if you drop that with that wick on that candle there. So it really depends on where you take the Fibonacci level, but at the moment it did hit that minimum range. Now since then, the CCI has broken into that moving average range, rising somewhat, and the price is also broken above that moving average range. That's on the monthly. On the weekly, similarly, we had another bearish divergence here, lower highs on the CCI versus higher highs on the price. That also dropped into that minimum range. This one went a bit lower. And again, depends where you draw it. If I took it back to the Fibonacci range, to that significant low there, you can see there the 38% was breached, and it went almost as far, just bounced off just short of the 50% retrace level. But at the moment, bullish momentum on the CCI, and also the price is broken above its moving averages, which shows up in our scan. And lastly, on the daily chart, we had a bearish divergence back here. You get the idea with that one. It also broke down and hit our minimum target range. These divergences, by the way, are all independent. They're not necessarily aligning with different time frames. But here you can see the daily is broken above the moving average range of the CCI, and also the price moving averages. I've also got this longer term CCI 1500, which is also in the description below. And it's a bit of, every indicator is a lagging indicator. This one gives you a lot more volatile movements. This one's a bit slower and a bit smoother in terms of its trend. So that just helps confirm the uptrend here we've had in the last few weeks. So again, this is on the daily. It's bullish, but notice it as well. It's broken into that, just touched that moving average range, and then it's bounced out of there. So maybe a continuation of an uptrend. But before we decide on buying, we want to look at the micro level. So we look at the 1 hour chart. So again, this is the daily here, this is the 1 hour. So the daily is touched it, so you would have got out of that trade if you're trading on the hourly at that point there, and you would have entered it this week again, going long potentially. Now I say potentially because looking at the 1 hour chart here, what you'll notice is a bearish divergence versus higher highs on the price, and that hasn't actually started to retrace yet. So again, assuming it starts pulling back from there, it's a bit early to tell yet, because it's still pretty much in an uptrend there. But assuming it starts pulling back from there, you can take it back to any one of these points. That point there, you can see the 38% level is there. Or if we took it back to that level, then the 38% level is there. So it depends again where you take this Fibonacci range. Again, I like to take it back to the previous low before the divergence started as a minimum, but this can fall a lot further. So just be aware of that. So we might see a bit of a pullback. These divergences, by the way, more than 90% of the time, they play out. So at the very least, we're going to see, I'd expect, a pullback to that around a 440 level as a minimum retrace. Now in terms of in other words, what I'm trying to say is don't go long yet until we see this divergence either play out or the price or the CCI as well invalidate, which means it should actually rise and go higher than that point there, which doesn't always happen. But if we go to this is the daily back test. So for the daily back test, if we would change that to the weekly on the higher time frame, remember you trade in the direction of the higher time frame, you would have gone long during that period when it broke above the price and the moving average of the CCI. And that's where this starts here. This is a stop loss approach, and the stop loss, investing $1,000 each trade would have generated $149 plus or minus with brokerage. And this is the average down approach. You can see there a few single trades, but it averaged down once there and once there. And this is generated so far and is still in the play with $97. So not a huge gain, but again, we're only trading, for the example, we're only trading $1,000 lots. Now that's on the daily. Now if I change this to the 1 hour period, if you're trading on the smaller time frame, let me just get rid of this Fibonacci, and we change this higher time frame to the daily. Again, you would have gone long at that point there when the CCI broke the moving averages, and likewise the price. That's where these back tests on the hourly started. So for the stop loss approach, so far a few trades there. This one stop loss has generated about $17, and this one has generated $117 because you've averaged down 1, 2, 3, 4, 5 times, and that's still in play at the moment. But again, like I said, whenever you see the daily touch that moving average range like it did there, you would have got out of the trade, and you would have got out before that latest entry there on both the stop loss and the average down approach. So the stop loss generated $23 and the average down approach generated $169. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content and it help keep me motivated to keep me doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me a cup of coffee. So again, the Microsoft stock was one of those that would have come up on the scan. Thanks, and talk to you in our next video.